Alright, what's going on everybody and welcome back to another video. So today's Friday, the last trading day of the session of the week. We just finished off a live trading call. We just took a live call as well, and we took a live trade inside the live call. So we took this trade here with gold, which was a buy position that we took at 37.56. You guys can see the stop loss. The stop loss was placed at 37.50. Take profit was placed at 37.74. So we took a very nice buy trade. This was at 9:35. We did have our live call set for 9:30. So we sent out the live call. We broke down the entire trade. As you guys can see, this trade did play out very nice. We ended up hitting our final take profit for a total of 180 pips at a 1-3 risk to reward. So it was a beautiful way to close out the week. And on top of that, this entire week has been amazing with gold. You guys can see every single trade that we've been taking has just been hitting profits to profits to profits. So yesterday trade, we did hit a 1-3. Today trade, we hit another 1-3. So in 2 days, already up 6R. This was the previous day, which was on Wednesday. We also hit another 1-3. So that's already 9R. On Tuesday, we caught a very nice trade, a massive trade that played out for a 1-7R. So I already lost count of how many profits were up for the day. We also took another one, which was a 104.6R, and then we also took another one on Monday, which was another 1-3R. So you guys can see that we're probably up over 20 plus R for the week, which is amazing. So in this video, I'm just going to give you guys the breakdown of the trade that we took. Let me just show you guys the profit that we made this morning with the buy position that we took. So this is the profit from this morning. You guys can see. Make sure you guys are able to see this. Let me go to the OBS. This is the profit that we took this morning. And then on top of that, let me show you guys the profit of the week. And this is account management. So look at that, and the account management. Look how much we're up. This is the biggest amount I've ever seen in my life trading. We go here on the settings. Beautiful. All right, so I'm gonna give you guys the analysis, the breakdown of this entire trade and how did we take it and what exactly was I looking for. So this morning in the live call, I broke it down. I explained it as well. I might post that on YouTube as well. It's gonna be more of a raw video so you guys can see the other perspective as well. But what I like to do always whenever I'm doing a top-down analysis, whenever I'm looking for a specific trade, right? I'm always want to be looking off the weekly time frame and the daily time frame, right? So in today's market, since it's Friday, we're already coming to the end of the week. All I'm simply going to be doing is marking up the previous or the current week lows and the current week highs. So the current week lows, the current week highs, the reason why I'm going to do this is simply because for two major reasons. Either one, those zones can be considered as target zones, or number two, there can be areas where price action is having a retracement from as of right now, where price action can probably have a type of liquidity sweep to either continue a trend towards the upside or downside, or just starts having a shift of structure, right? Like a type of change of character. So in this case over here, I simply just marked up, obviously the weekly lows and then the weekly highs over here. We go back here on the daily time frame. The daily time frame, I'm pretty much doing the same exact stories, marking up the previous day's highs and then the previous day's lows as well. So in this case, if we look at yesterday market perspective, all we're going to mark up here is going to be these daily highs, which is going to be set somewhere between the 37.61, and then we also have these daily lows over here, which is going to be set around the 37.23. So that is just the basic start. It's just marking up the daily highs, the daily lows, wick to wicks, and then same thing with the weekly time frame, wicks to wick. Now, the most important part here with this trade here is understanding the overall market condition, market trend. So if we kind of go down here on a 1 hour time frame perspective, we did see that earlier this week. This started on Tuesday. On Tuesday earlier this week, we started having a change of character, right? This is exactly where price action started shifting structure. So obviously we did notice that gold has been extremely bullish, just simply creating these higher highs and higher lows, to now start having these type of shifts of structure, to now creating bullish market. Went from a bullish market to now going into a bearish market, right? So in this case over here, we have the major highs, which is going to be set somewhere between the 37.90. This is going to be known as the major resistance zone. From here, this is where price action formed a new higher low, which you guys can see how price action was having bounced from it to now creating the new or the next previous lower high. So here is where we started having that, that change of structure from a bullish market to a bearish market. So we had this lower high, price action did the same thing over here, broke structure, came back, retested this entire broken structure, which is going to be considered right over here around the 37.55 zone. Price action respected it, created that lower high, and then boom, comes back towards these demand zone. So these demand zones right over here are the 37.25 zone, which I'm going to explain right now. Give me 1 second because this cat is playing around with some stuff and I can't even hear it. Come over here. Look at him attacking me. Alright. So we just closed down that cat right away. Let's see. You guys are so able to see. Perfect. So again, like I was explaining to you guys, we went from this short-term bearish structure, obviously seeing price action dropping trend, but respecting these major lows over here. Now these major lows were the same exact lows where we took a buy position from Monday. So on Monday we build up these demand zones. So another way that I like to explain, supply and demand zones is where obviously buyers are stepping into the market. This is where orders are being placed. So let's give you an example. Let's say this was on Monday. This was the first demand zone that we built. We first had this entire bullish move towards the upside. Let's say that 80% buyers, or let's say 60% of buyers started buying the market between over here, right? We started buying the market between over here. Over here, price action starts having a retracement, meaning that 40% of buyers are now stepping into the market. So let's say 20% stepped into here, respected this demand zone, leaving the other 20%, price comes back over here, then the other 20% of buyers are now stepping towards these zones. So it shows us clear that this demand zone over here is holding perfectly. It's showing us that buyers are still maintaining these entire levels over here. If we go back into a 4-hour time frame perspective, we can still see that these 4 hours over here are still maintaining itself above it, which clearly means that price is still overall bullish, even though on the intraday time frame, on the 1 hour 30-minute time frame, we have seen that price action change their character, like from a bullish market to a bearish market. We're still respecting these all times, like higher time frame zone levels, which is going to be around the 37.20 zones. So you see how it respected it over here, how it respected these zones over here, and respected these zones over here 3 times in a row. So the obvious idea here, it shows us that buyers are still in control of the market. Now, worst case scenario, if price action would have broken underneath these levels over here, a candle structure would have broken underneath like this, then we can probably start seeing price action do the same exact thing that happened right over here. Same thing that happened right over here, and same thing that happened right over here. We're breaking underneath all of these entire lows where price action is now obviously creating new lower lows and lower highs. But that wasn't the case. So in today's market, this was one of the major zones that I had marked up, which was the main zone of the day. So with the main zone, due to the fact that yesterday during the Asian session, this was 9:30, this was in the morning. So this was actually during the New York session. So this was Thursday, London session, ranging, broke out, retested these zones, maintained itself underneath. We go into the 5-minute time frame. The 5-minute time frame starts having a break of structure, starts shifting the structure towards the downside. So we respected major zones, and then we had the break of structure on the 5-minute time frame. So another good way to explain it, these zones over here are minor levels. They're not really major levels, so we can care less about these things that's happening on the 5-minute time frame. So these levels that we marked up, like the lines over here, they're marked up from higher time frame. So the goal, my strategy is simply wait for price action to come to the areas of interest. The areas of interest is always going to be these lines. And those lines, all it simply needs to do, it needs to react from it and reject. And it can either close underneath or close above it. So in this case, we have the major levels, which is going to be these zones over here. We did see that price action pulled back towards this zone and had a reaction from it, right? So we had the first reaction, and then this is where price action had the first move. Boom. So the confirmation here is that, first of all, we're trading the intraday structure, which is a bearish market. The intraday trend, which is a bearish market. We're trading underneath these levels over here. If we take a look at the left side, what are these levels? Areas of support, areas of support, areas of support. We broke underneath. We're pulling back. What is the basic logic at this point over here? Whatever breaks under support can potentially turn into a resistance, right? So in this case, we turned this level into an area of resistance. We have that broken structure. We broke out of this 5-minute trend over here, which was simply bullish higher highs and higher lows. Created this new low, pulled back, forms a new lower high, retested, rejected, close underneath, boom, we enter the market. Perfect. 1 to 3 risk to reward. Now, what happens next? This is exactly the trade that we took this morning. This morning, very similar concept. All of these concepts over here are very similar. They're not changing. We're just simply reacting with the trend. The concept, the entry, the system, all of that continues being the same. It's just simply reacting with the trend. So in this case, we are respecting a major higher time frame zone, which is going to be this demand zone right over here at the 37.25. We already saw multiple bounces from these levels. What is the next thing that we start seeing on the 5-minute time frame? We start having that shift of structure. So notice how this shift of structure over here was bullish from highs, higher lows, higher highs, higher lows, to highs, to low, to lower highs, to lower low. These are minor structure. Higher time frame structure, we're still trading highs and highs. These are equal highs. These highs over here are not lower than the previous one, so it's still considered as lows. Still considered as lows, not highs. My bad, guys. Still considered as lows, not lower lows or lower highs or higher lows. Just consider as lows. Over here, we start having the break of structure. So over here, notice what we were creating: highs, lower lows, lower highs, lower lows, lower highs, lower low, to high, higher lows, higher highs, and a major higher low. This over here is the intraday higher low. So we have the swing highs and we also have the swing lows over here. If we grab the Fibonacci level from this point over here to this point over here, what do we have? We have the retest of the golden zone. Boom, everything is aligning perfectly, right? So we have the retest of that golden zone, which is going to be the 0.618 and the 0.15, the 0.5. Notice how we rejected and maintain itself above it, which is already a good sign. So confirmation with these buy position. Let's go again. We have the overall trend, which is bullish. We have the respect of this major demand, 37.25. We have the confirmation of the shift to structure from bearish to bullish, high, higher, low. So it's showing us, it's like gold over here at this point over here. Gold is showing us that obviously buyers are in control of the market. But again, us as a trader, what do we trade? We're always going to be trading high probabilities. So in this case over here, market was just ranging. So there was no point for us to either buy the market or for sell the market, right? So at this point over here, since we're not buying or selling the market just yet, the mindset or the mind that we need to have, the plan that we need to approach here is just simply wait for the breakout. So whenever we're trading in the ranges, the idea is for price action to have a breakout. But sometimes we have to be very patient with these type of breakouts, because these breakouts can either be considered as manipulations, right? So manipulation can be either that price action is just accumulating for a few hours. We have the manipulation. We have the retest of the areas of interest, but then that retest can turn into a distribution. So the accumulation to the manipulation to the distribution. That can be the case sometime with the breakouts. So that's why it's very important to identify a valid breakout and not a valid breakout. In this case over here, we were just trading the trend. We respected a bullish trend. We respected the demand zone at the 37.25 zone right over here. We created this higher low, which is the intraday higher low, which is also rejection from the fib level, which is confirming that buyers are still in it. We broke out of the ranges and we retested that range. So we already have 4 confirmation. On top of that, if we go here in the 15-minute time frame, we have the VWAP trading underneath. Go here in the 30-minute time frame, we have the rejection of the VWAPs. You guys can see that how it used to be above the candles, showing us seller volume, until it started going above or under the candles, showing us bullish volume. We go here in the 1-hour time frame. What do we have? We also have the same exact VWAP pattern. You see that? So whenever the VWAP is above the candles, like trading above it, showing us that there is seller opportunities. But whenever it's underneath the candles, it's showing us that there is buyer's opportunity. You see that on the 4-hour time frame as well. So we already have multiple confirmation in today's market. So all we simply waited for was just a breakout. So the breakout was this candle right over here, which was during the New York session open at 9 o'clock. Boom, the breakout. The reversal, the respect. The entry candle for us was this 5-minute bullish engulfing candle. We enter the market. What do we target? We target back towards these highs right over here. What was the results? Clean 1 to 3 risk to reward. Beautiful trade. Now, worst case scenario, if this case right over here would have closed underneath, it's basic logic. We're not going to trade this. The reason why is because we're trading back again a no trade zone. This trade zone over here is just bouncing from one point to another point. You see that? It's just bouncing from point 1 to point B. So there's no point for us to either buy the market or sell the market. There's no perfect entry around these zones over here. All we're going to get here is just going to be stress. All we're going to get here is just negativity in mind, which is going to be fear. Like, oh shit, what the fuck did we enter? Right? So if it would have broken underneath these levels over here, then maybe we can probably look for some sells. We will obviously have to react carefully. But this can be some good zone for sells. Or better zones will be underneath these levels. Perfect. But that was the trade that I took today. It was very simple. Just simply reacting from major zones and just going along with the trend. That's how simple it was for today's market session. So I hope you guys enjoyed this breakdown. Hope you guys got some information, some education off this breakdown video. And I'll see you guys on the next one. It's Friday. We close out the week in profit. You guys saw the profit. What a wonderful week. Hope you guys enjoy, and I'll see you guys on the next one.